Good afternoon. I'm Teresa Hinton, Chief Operating Officer at the New Jersey Society of CPAs. Welcome to IssuesWatch. If you would like to ask a question during today's presentation, please use the Q&A box just below the media player. You can also find numerous links in the resources box on the right side of your screen. Resources include today's slides and a handy list of links for many of the items mentioned during the program. If you have any technical issues with audio or video, we recommend refreshing your browser or exiting and re-entering the program, as this should fix most problems. We also highly recommend viewing this webinar on a laptop or desktop using Google Chrome or Firefox as your browser. If you are still having technical difficulties after trying these fixes, please put a comment in the Q&A box and a member of our team will gladly assist you. To receive CPE credit for today's program, you will be asked to respond to several participant check-ins. These check-ins will appear on your screen along with a sound alert. All you have to do is click the green check mark to let us know that you are actively participating. If you have a colleague who wasn't able to attend today, they can register to watch the replay of this session on August 1st. So, okay, let's get started. I'm joined today by AJ Johnson, the new CEO and Executive Director of the NJCPA. Welcome, AJ.
Thank you. It's a pleasure to be here today.
I'm also joined by Ed O'Connell, partner at Witham and the 2023-2024 NJCPA President. Welcome, Ed.
Thank you, Teresa. I'm also very excited to be here today.
Good to have you. Today, we'll be covering the national and New Jersey economies, legislative updates, tax updates, the CPA pipeline, and more. But first, let's take a few minutes to get to know a little bit more about AJ.
Sure.
AJ, we're so happy to have you on our team, and we know you come with a wealth of experience that's going to benefit the NJCPA and New Jersey's business community. But Ed, you want to learn a little bit more about AJ with the team?
Absolutely.
Thank you.
Hi, AJ. The accounting profession is not new to you. Tell us a little bit about your previous position.
Sure. So I come to NJCPA with 5 years of experience supporting the profession. I was the executive director at BKR International, where I served as the executive director for the Americas region. I also ran the executive office and worked closely with managing partners, their teams, from small offices, mid-size, and large firms. So I'm really excited to be here.
That's great experience that you bring with you to NJCPA. What interested you in the CEO position here?
So I think it's really the opportunity to go from the global perspective that I've mentioned and really focus on the state issues and really support the profession at the state level. So it's really exciting for me. I feel that I'm walking into an organization that is already strong membership, and I just want to continue to, support that growth and make sure that we have a voice at the table.
That's great. I know you recently embarked on a listening tour with members and other firms. What are you hoping to get out of those meetings?
That's a great question. So I officially kicked off the listening tour at Eisner Amber. And I will be going around and getting to know so many members, and I'm really excited about that. Really, the priorities there is to understand the issues facing our members and their firms and their practice, and to be able to look at how we can prioritize that internally to really make a positive impact.
That's great. What are some of your top priorities for this year ahead?
I would say I'm really focused on the directional initiatives. So ensuring that we sustain our market presence, improve the member experience as well, and then to continue to amplify the NJCPA brand and voice.
That's great too. Now we wanted to have a little bit of fun with the lightning round of some quick questions.
Okay.
Are you a winter person or a summer person?
Definitely summer.
Do you prefer texting or talking?
Talking, for sure.
Do you prefer coffee or tea?
I'm a big tea drinker. I like matcha and chai.
What's the last song that you listened to?
So a friend sent me a summer playlist, so I've been checking out songs from that lately.
Great. If you could have one superpower, what would it be?
I would say being a summer person and seeing all of the issues with flights, maybe to fly.
Speaking of flying, do you prefer an aisle seat or a window seat?
Window for sure.
What's the favorite place that you have traveled to?
I really enjoyed my time in Madrid.
Okay. Where's a place that you haven't been that you would want to visit?
I would like to travel throughout Europe. I would like to go to San Sebastian, hang out on the coast. So I think that would be a nice trip.
Great. What's your favorite ice cream flavor?
As of lately, it's a dairy-free chocolate ice cream. I think it has more sugar, but that's been my go-to lately.
Okay. And we have to end with one New Jersey question inspired by NJCPA member Jesse Hirschbein. Is it Taylor ham or pork roll?
Okay. I understand that's a controversial question, so I will stay neutral.
Okay. Teresa?
Taylor ham all the way. Come on. Thanks, AJ and Ed, for that informative and entertaining conversation. Now let's take a look at the economy. We recently conducted an annual survey with members about the New Jersey and national economies. This year's survey was sponsored by AllianceBernstein. AJ, do you want to share some of those survey results?
Sure. So what was most notable about this year's results is that our members are decidedly less pessimistic about the economy than they were last year. When asked about the economic conditions in the U.S. for the second half of this year as compared to the first half, 47% felt the economy will stay the same. 37% said it will get worse, and 16% said it will get better. Last year, 69% said it would get worse. When it comes to New Jersey, 44% said the state's economy will get worse the remainder of this year. 44% said it will stay the same, and 12% felt it will get better. Last year, 65% said it would get worse. The top three business challenges cited by members were the same as last year: inflation, availability of skilled personnel, and state and federal policies unfriendly to businesses. But when we asked what measures the government could take to help, the results varied a little from last year. The top two results, implement measures to ease inflation and reduce burdensome regulations, matched last year. But taking the number 3 spot this year was invest in infrastructure. The NJCPA's Don Meyer recently talked with Roosevelt Bowman, senior investment strategist at Bernstein Private Wealth Management, about the survey results. Here's a clip of that discussion.
Do CPAs have reason to be more optimistic or even less pessimistic about the U.S. economy the rest of the year?
You know, I think part of what's playing into that is that there were lots of recession calls and it hasn't come to fruition yet. You know, we're still expecting pretty significant economic slowing over the next 6 to 9 months, but there's no doubt that the quote unquote kind of soft landing scenario is a lot higher probability than before. And I think a lot of times when we hear the word recession, we kind of harken back to the last couple of episodes, right? Just putting the pandemic aside, but 2008, the tech crisis in 99, I would argue those are very different scenarios than what we're looking at now. We're looking at more of your generic economic slowing, and from a much better starting point in terms of the labor market. The unemployment rate is about 3.5%. That's much better than the normal level that you would see when the economy starts to slow. So, you know, 99, 08, those crises really had way too much leverage in a couple sectors. In 99, it was technology. 08, obviously the housing sector. You're talking about trillions of dollars of derivatives that really fell the economic and financial system. That's thankfully not the case this time. We will see some pullback in terms of credit that's available because of banks and kind of the slowing economic activity that the Fed's trying to engineer to push inflation down. But again, our starting point's a lot better, and we don't have that same excess borrowing and leverage throughout the financial system that we saw in 99 and 2008.
So our members basically are saying status quo for the rest of 2023. From an economist standpoint, is that necessarily a bad thing? Or is it, if you're not growing, you're stagnating? But is status quo necessarily bad?
Yeah, I think we'd probably lean more towards some slowing, but slowing from a good starting point, right? And I think a couple of forward-looking indicators that I love to follow. The job market in terms of current data, it's still showing some pretty good resilience. But when you reference some of those forward-looking indicators that we've talked about in the past that I still love to follow, online job postings, that's showing kind of receding demand for labor. When you look at the ability to negotiate salary in new positions, right? The amount of people quitting versus those that are laid off. Before, that ratio was really big. You had a lot of people quitting and people were not being laid off. Now that ratio is falling. You're seeing, unfortunately, more layoffs, fewer people quitting. The power is shifting from the employee back to the employer some. So I think it's fair to expect not exactly status quo, some economic slowing, but again, from a pretty good starting point and more of that quote unquote normal economic activity kind of falling back rather than something like a big crisis and a sharp fall off in growth.
The AICPA recently released the results of their latest quarterly economic survey. Those respondents also said that inflation is their number one challenge. Domestic economic conditions was number 2, and employee and benefit costs was number 3. And availability of skilled personnel came in at number 4. However, unlike the NJCPA survey, the AICPA respondents' optimism about the national economy was actually down slightly from a year ago.
So what did you guys think about those survey results? I know for me, employee benefit costs is a challenge. We've seen some double-digit increases in medical, and even dental was up this year by 8%, which is unheard of. Historically, dental is only like 3 to 5%, so a 3% increase is a significant positive.
That's a lot.
Yeah. Consumers, I think, are also still feeling the pinch. I know for me, when I go to the grocery store, I'm unhappy. It's very expensive. Still feeding lots of people at my house. And also, I read in one of the local newspapers that New Jersey energy prices are 3.5% to 4.5% higher this year than they were last year. So I think some work still needs to be done to bring down inflation.
Definitely. I would agree with that.
Yes.
Yeah. So now we're going to switch gears and to legislation and advocacy, 2 critically important tools for making change. By working together, we can influence the laws that affect our profession and our community. There will be a Q&A session at the end of this section, and we encourage you to submit questions via the Q&A box on your screen. The more we know about legislation and advocacy, the more effective we can be in making change. Let's kick things off with some New Jersey updates. On June 30th, Governor Murphy signed a $54.3 billion budget for New Jersey's 2024 fiscal year. That's roughly a 7% increase over the previous budget. I'll share a few highlights of what the budget includes. Good news, there's a surplus of $8.3 billion. The budget includes $400 million for the debt defeasance fund, which is actually down slightly from the proposed $2.35 billion. There's an additional $832 million in school aid, pushing the total to a record high $11 billion. The budget includes a full $7.1 billion pension payment for public sector employees. There's over $2 billion included for year 2 of the Anchor Property Tax Relief Program. The income limit for the Senior Freeze Property Tax Relief Program increased from $100,000 to $150,000 for the 2023 tax year. And there's a few $100 million as a down payment for the Stay NJ program, which won't fully go into effect until 2026. At that point, it will cost $1.2 billion annually to fund. Stay NJ was added late in the budget negotiation process. The NJCPA's Jeff Kasman recently sat down with John Reitmeyer, budget and finance reporter for NJ Spotlight News, to discuss this topic. Here's a segment from that interview.
I think it's smart to highlight that as a key difference between what the governor proposed and what we ended up getting as a final budget, because that also slowed down the process itself because they were negotiating sort of the contours of this new program that the legislative leaders wanted to create that Murphy initially had some reluctance to sign on to. And basically, as you alluded to, Stay NJ in the short term is really just a savings program on the state side of things before it could eventually grow into a new state-funded property tax relief offering for homeowners age 65 and older down the road. And so for the first few years, the state is socking away money to envision seeding what would be a major new offering that could fund what have been promised as relief benefits that could have the property tax bill for many senior homeowners, although there will be an income ceiling in the final version, at least as was written into law at the end of June, and would also be a cap on the maximum allowable benefit that a senior could receive if they meet that income eligibility, which they set at $500,000 in annual income and $6,500 in maximum annual benefits, but not until 2026. So I was very careful in my coverage of this not to give the impression it's some immediate tax offering for seniors, because this is quite a ways down the road, and there are some questions about whether the state will be able to meet this commitment. At the same time, we've got a bunch of other things happening on the revenue and spending side of the budget. So it's an ambition right now for lawmakers. It is a slimmed down version. They originally proposed something that was uncapped in terms of annual income and had a higher annual benefit that would be allowed at $10,000. So that's no longer the case. And for the first few years, it'll be setting aside money to fund these benefits, and then we'll get into the meat of it starting in 2026 if we get there. And they also have this challenging task of trying to deliver these as direct credits on property tax bills rather than make seniors pay property taxes out of pocket, which is a big issue for many seniors. They like to get the reimbursements through programs like Senior Freeze, but they always have to pay out of pocket and then wait for those reimbursements, which can be a big lift for seniors on a fixed income, as many of you know. So that's another thing that they're going to try to accomplish in the ensuing years, as well as sort of streamlining the application process, which right now there are many different programs that seniors qualify for. So they definitely got their work cut out for them, but they gave themselves a little bit of a runway to achieve it.
You can see the full interview at the link on your screen. AJ, I know you've been working with Jeff on the legislative front. What can you share?
Sure. Thanks for that. I'm happy to share that there have been a couple of recent legislative victories. Legislation drafted by the NJCPA Cannabis Interest Group to decouple New Jersey from IRC Section 280E was signed by Governor Murphy in May. As a result, New Jersey cannabis businesses can now deduct business expenses on their state tax return just like other businesses. It is effective for fiscal years starting January 1 of this year. We fought hard for this bill and are very pleased that cannabis businesses are now on a level tax playing field in the state of New Jersey. So I want to say thanks again to our Cannabis Interest Group for their work on this issue. Another bill that was drafted by the NJCPA, working together with the New Jersey Business and Industry Association, is one that will provide lawmakers, the media, and the public with a better understanding of New Jersey's finances. The bill, which has passed the New Jersey legislature and is awaiting Governor Murphy's signature, would require the state auditor to annually issue a reader-friendly summary of the New Jersey Annual Comprehensive Financial Report, also known as ACFR. ACFR provides in-depth information about the state's complete financial picture beyond the annual budget, such as long-term liabilities and independent authorities. However, it's more than 400 pages and is filled with technical accounting jargon. So the shorter summary document would make the information much more digestible. And it also would include per capita comparative statistics from Mid-Atlantic and Northeast states. The bill would also require the state auditor to testify on the ACFR before the Senate and assembly budget committees at the beginning of the annual budget process. So we hope to be able to report very soon that the governor has signed the bill.
Thanks, AJ, for that summary of what's going on in New Jersey. Ed, do you want to shed some light on what's happening on the national landscape?
Sure. Here are some updates provided to us by the AICPA. With Congress's August recess on the horizon, the House and Senate are working furiously through the few legislative days remaining in the month of July to move the appropriation bills and several critical reauthorization packages through as much of the legislative process as possible. In September, the House will have 12 legislative days and the Senate 17 to wrap up business before the end of the fiscal year. The goal is to avoid a government shutdown. Earlier in July, the House passed the National Defense Authorization Act, the NDAA, for fiscal 2024. The bill is the first step in the annual defense appropriations process, and with its status as a must-pass bill, it has become a vehicle for passage of non-defense programs in recent years. The AICPA is tracking legislation for signs of items related to the accounting profession that may appear in the House and Senate bill. So far, legislation to require gatekeeper professions to play a more substantial role in anti-money laundering investigations by law enforcement have not been included in this year's legislation. The House and Senate NDAA bills are expected to go through conference in September. Through September, lawmakers will continue to work to advance the 12 annual government funding bills prior to the September 30th deadline. The upper and lower chambers are seemingly moving in different directions, with the House passing spending bills along party lines and the Senate taking a more bipartisan approach. In the House, the Republican majority must continue to maintain party discipline to pass these spending bills. The House Freedom Caucus warned Speaker Kevin McCarthy that they expect spending levels to line up with fiscal 2022 levels of $1.47 trillion. House Democrats raised concerns that the cuts along party lines to the fiscal 2024 state, foreign operations, and related programs appropriations bill and the financial services and general government bill. These bills will make for an active and likely fractious September and the real possibility of a government shutdown if continuing appropriation bills do not pass while the House and Senate work through appropriations. The House and Senate have built in 6 weeks of legislative sessions through the fall in hopes of reaching an agreement on the spending levels for 2024. Artificial intelligence remains in the headlines, and legislatures are continuing to schedule hearings and introduce legislation to put legislative and regulatory guardrails around the technology. Additionally, several downtown Washington, D.C. think tanks held briefings during June and July. Additional briefings are also expected in September. Legislation is far from moving, but key members in leadership, including Senate Majority Leader Chuck Schumer, have made AI a legislative priority.
Thanks, Ed. We do have a question from the audience, and I wonder if you guys would be comfortable answering this. With all seats in the New Jersey legislature up for re-election, we often get questions from members about how the NJCPA PAC supports candidates. Ed, I understand you just got off a PAC call.
I did.
Can you share a little bit about how the PAC supports New Jersey CPAs?
Sure. The PAC is a nonpartisan process that we go through. We support candidates that support the business community in New Jersey, and we go through a process of evaluating those on a regular basis, including today's call.
And the NJCPA PAC is really the only PAC in New Jersey that supports CPAs in New Jersey. Is that correct?
Yes.
Yeah.
So it's really important that we get the support around the PAC, because that's where we can have impact at the legislative level, I feel.
Yep. Right. They all want a little money.
Yeah.
Thank you. Transitioning now to our tax update, we're excited to once again have Marita Scarata, Deputy Director at the New Jersey Division of Taxation, here with us to provide a New Jersey tax update. She is an invaluable resource for NJCPA members. I want to really thank Marita and welcome her.
Teresa, thank you so much. That's a lovely introduction. I appreciate it. It's always a pleasure to speak to and work with the society. Our job is really to support one another, because the compliance that we expect in order to continue to have a good revenue stream in New Jersey is largely in part by the cooperation that is seen between our my agency and this esteemed group. And I have a lot of admiration and have a lot of one-on-one contact with so many of you, and I just appreciate and respect what the NJCPA does and how they comport themselves with us. So anyway, let me just get down to what's been changing here in New Jersey, and I think a lot of the budgetary information that was just spoken of is really, really important, and I'm just going to expand on that a little bit. And I'm trying to hit the high points here in terms of what y'all need to know in order to be ready for the upcoming tax year and to wrap up the one that we're currently in. So let's start with something that always happens, which is, or always is a hot topic, is the 2023 corporation business tax returns and when they're going to be ready. So the returns and instructions for the CBT 100, the 100S, and the 100U should be ready by October, both for our sister agency, DOORS, the Division of Revenue and Enterprise Services, who does the processing of these returns, and all software vendor for their development. There have been a number of changes to the three returns, and details of these are described in our technical bulletin 107, so you can always look to that for more information. Notable changes to the return include the removal of the BFC, which is the banking and financial return. These filers will now be included on the 100 or the CBT unitary filing. New Jersey is transitioned to the Finnegan method for all CBT unitary filings. There has been a change to the treatment of GILTI, and there have been changes to net deferred tax liability. So all of this information will be updated on our website. Software updates that probably are of interest to our members here. There's not so many things that are specifically software related. However, as in years past, CBT changes do create a bit of a challenge to getting into the software sphere. So some vendors may experience a delay in getting their software out on what we'd like to see early. So for those people who are concerned about, when are we going to see this stuff? The software vendors that we vet are truly great, but sometimes it does take a while to stand up their product, depending upon how many changes they need to associate with. Our forms package is ready to submit to the vendor, and on time. So we're very hopeful that any delays are minimal. In years past, it's been as late as November that we've had to make some changes, and that really dug into the availability of these forms. From a technology or processing standpoint, one of the big things here, of course, is the change in the way that S-Corp elections are being made. So there's three ways that we can. There's three ways that folks will be able to notify the state of their federal election. When completing the initial registration with the Division of Revenue and Enterprise Services, you can also elect by using your current S-Corp election application. This is being revised to meet the new statutory requirements, so it's not settled yet. So look forward to that material. And filling out the shareholder jurisdictional consent, that's Schedule SJC on the CBT 100S return. This is all for the 2023 filing year. Please note that a copy of your federal election or the entity's federal election is required to be included in all of these filing methods. There are no real big changes to TGI, that is gross income tax, or partnership tax this year. TGI that is the 1040s, will have an EZE checkbox and also increases to the child care credit. Just to give you a quick rundown of what's happening with partnership and PTE in terms of filing, because this is always, I think, very interesting. The number of filers that is pretty much holding steady for the NJ 1065 and the CBT 165, and just about 96 to 97% of you are able to file electronically or using the tool that we have on our website to electronically submit the return for the 65 and the CBT 165, and the PTE 100, of course, has to be submitted 100% electronically. As for CBT for the 2020-22 year, we're about a little over halfway of the total population that we expect compared to last year. So we've received a total of, I'm just going to say 122,500 returns for all three areas of CBT, CBTS, and CBTU. I noticed that there is a drop again in the number of paper submissions. Please keep that up. Being able to file this material online is highly important. It allows us to match the material very quickly and not bother you as much with questions, particularly when there's an audit period taking place. One thing that is becoming more and more important that I see with gross income tax employer reporting is this. There is an electronic filing mandate for W-3s and W-2s. However, there's still a small percentage of employers who are still submitting paper W-3s. And why this is a problem is because of the fallout and the impact it has on income tax filers. The individuals who are affected by this is a little scary. Right now, I can tell you there's paper filings for 2022. It's just about 5,500 taxpayers. And the electronic W-3 submissions are over 300,000. So it's a very small percentage of people who are continuing to file by paper. But there are some larger employers in there, believe it or not. And what that does is exponentially, for every paper W-3 filed and paper W-2 submitted, it can have a negative effect on the way we process and validate information when we're processing those NJ 1040s and looking to make sure that we can match funds to ensure that a proper refund or proper bill is sent to taxpayers. So it may seem like a little thing to some people, but it is a big thing. Other technological updates. There's some really interesting things that are going to be happening over the next several months with our call centers, improving our ability to respond to questions, improving the way that we answer our calls so that there is not as many what we call courtesy disconnects or disabling of the phone system when we get too many calls coming in all at once. Let me do that again. So my timer just went off. Sorry, so I'm going to try and wrap this up as quickly as possible. You'll first see these changes happening on our Anchor Property Tax Relief Program call centers. These things will be rolled out probably certainly in August and early September. I do want to mention something that I think is very important. Anchor season is upon us again. The second Anchor iteration, that is Anchor 2020, is being rolled out later in August. There will be mailings much the same way that they were done last year. Clients should be reminded that if they get something about their Anchor application, that they should hold on to that mailer and not consider it to be junk mail. If they have questions, they are more than welcome to look at our web pages. There's a lot of information that's on there. Calling is an option, of course, but again, there's several million people that are filing for this tax benefit, and sometimes it's really hard to get through on the phones. As much as we've expanded and actually quadrupled some of our staffing on these call centers. I'm looking at some of these questions in the Q&A, and let me see if I can answer a quick one for them. Local practitioners are going to start preparing the PTR 1s and 2s for clients with increased eligibility and availability of the form online. Right now, the PTR 1s and 2s for the 2022 year are available online. You are able to also file those electronically and upload any documents that you need to for the 2022 year. Of course, checks started going out on July 15th and will continue to go out through the end of the filing season. The deadline for the 2022 PTR, that is the senior freeze, is October 31st. I should mention that, and we've mentioned this before, New Jersey is undergoing an upgrade with its integrated tax system. We have a vendor online that is helping us make this conversion over to a web-based processing and let me just say tax system in general. What this is going to mean for the tax practitioner community as well as us, I think is going to be such a boon to what we do with one another, because we're going to have portal access to the information that we have systemically available to folks who sign up for the portal. The portal will probably be available sometime in the late spring, early summer next year in 2024. We were hoping to have this up later this year. However, there have been some really tremendous evolutions within this technical space, the technological space. And so because we are onboarding this new technology, we are expecting to launch our programs in the summer of June, I hope, of 2024. So stay tuned. We'll keep you updated. And we are doing a massive communication outreach to make sure that this information is available to the practitioner community and at large. And with that, I'm going to close. Thank you very, very much for your time and attention.
Marita, we do have
Yes.
Never mind. We're going to hold off on any other questions. We'll answer them later in the Q&A.
Very good.
Thank you.
Thanks very much. Have a good day.
As we all know, the demand for accountants is growing, but the number of people entering the profession is declining. This is a serious issue because CPAs play such a vital role in our economy. This issue has commanded a lot of national attention, and the NJCPA is digging deeper into this issue to see how we can work together to shine the spotlight on what a great career choice accounting is. AJ, do you want to elaborate on this?
Absolutely. So the profession has a pipeline problem. The number of accounting graduates and CPA exam candidates have fallen to levels not seen before in 15 years. The reasons for these trends are many and varied, but the bottom line is that the profession is not attracting enough new accounting professionals to replace the CPAs who are reaching retirement age. In response, the NJCPA Board of Trustees asked the Society's Strategic Planning Committee to assemble a pipeline task force made up of a diverse set of professionals from public accounting, corporate accounting, and finance and education. A conscious effort was made to include the Society's emerging leaders who bring a fresh perspective and new ideas to the discussion. In fact, the task force is headed up by Zach Cohen, who is also the chair of our Emerging Leaders Council. The pipeline challenges impacts every segment of the NJCPA, including membership, the scholarship fund, and the education foundation. The task force has been entrusted with developing a set of actionable and measurable recommendations that will unify the work and ideas of leaders and staff in a collective society and profession-wide effort to address the pipeline challenge. In developing the recommendations, the task force will identify areas that need improvement, practices, and programs that the NJCPA should launch, continue, or ramp up, practices and programs that the Society should stop doing, or direct resources away to higher priorities in areas where we have a gap in knowledge and need further research. The task force is studying the following pipeline challenges: negative perceptions of an accounting career among students and recent graduates, updating communications, tools, and platforms to raise awareness about the benefits of an accounting career to students, improving access to an accounting degree and CPA licensure, partnering with firms, local and national organizations also engaged in pipeline growth initiatives, and engaging current CPAs and members in a collective effort to grow the pipeline. The task force will deliver the first set of recommendations to the Strategic Planning Committee in the fall, followed by a presentation to the Board of Trustees in early December. We will provide regular updates on the task force's progress and highlight ways that all members can help.
Thanks, AJ.
Thank you.
There's also been a lot of discussion and debate around the 150 credit hour requirement to become a CPA. In an effort to make achieving the final 30 credits easier, the AICPA has developed the Experience, Learn, and Earn program. The AICPA's Jan Taylor recently appeared on the IssuesWatch podcast to discuss the program. Here's a clip from that interview.
AICPA and NASPA got together and tried to come up with some, ideas of how we can develop an integrated education and experience program. We wanted this to be for those students who have already graduated, have a degree, an undergraduate degree, but don't yet have the 150 credit hours that are required for licensure. So what we have done is we've developed this ELE program, the Experience, Learn, and Earn program. And the idea is for us to combine meaningful online college study that is integrated with some early work experience. So to be a participant in the program, the student, as I just mentioned, graduates with a bachelor's degree. They have the core accounting classes, that are needed already. So this is not designed for someone who, maybe has a degree in biology or something. It is really for that person who has graduated with a business degree, has those requisite core accounting courses, but they don't have the 150. They join a firm right away as a paid first-year staff member, not an intern. They are going to get up to those 30 credit hours that they need. When I was an educator, I had a lot of students that would graduate with, 140 hours, because they changed their major or they took some additional courses throughout their, undergraduate degree program. But so it'll help them get up to those 30 hours online, while working a flexible schedule, and they're getting that paid work experience. So they'll complete their credit hours and then they go on to their journey to CPA. So we're doing a launch of a pilot program to kind of test this out this fall. And they're going to be, getting some cost-effective courses from our pilot university. And as I mentioned, have the opportunity to earn those 30 credit hours. We hope to expand the program after the pilot, and we want to include many more universities throughout the country. And so we are looking at universities that are going to be able to help us offer those additional up to 30 credit hours for under $5,000, which is it's a hard ask. We recognize that, and certainly it would be less if they have graduated with more than the 120. And so again, we are hoping that we're looking at just offering one additional pathway to CPA. This is not intended to replace master's level programs or other ways that candidates can get there, but just one additional pathway.
Here in New Jersey, there's another pilot program called the Work for Credit program between St. Peter's University and PwC that is providing an alternative path to the 150 credit hours. And we've recently heard that there's another local university is developing a similar program with a large New Jersey CPA firm. 3 people involved in the St. Peter's PwC program recently discussed it at the NJCPA Convention and Expo. Here's a clip from that session.
The New Jersey State Board of Accountancy recently sort of shifted the paradigm a little bit with enabling a 30 credit basically enabling 30 credits to be earned through a work for credit experience. So this required a paradigm shift at the state board level. And as part of that shift, and I'll just kind of credit Dan Geltrude with driving some of this, Dan Geltrude and Eileen Poyani, and I'll explain why those names in particular. They came to St. Peter's University and they said that, this is a paradigm shift, and we want to be able to see if it's a legitimate kind of pilot, if it's a legitimate sort of concept that graduates can potentially earn 30 credits fully at work. Now, the reason why St. Peter's, just a little bit of background, is that Eileen Poyani, she's the public member of the State Board of Accountancy, and she's also a professor at St. Peter's University. So there was a connection there. We jumped at it because at St. Peter's we have work for credit kind of paradigm in place. Students can have an internship, earn credit, and we have an arrangement. There's policy and process in place to ensure that that internship meets the standards that we have in terms of learning outcomes and learning objectives and that kind of thing. So we were, to a degree, primed to jump at this opportunity, but it did take a significant amount of work and collaboration with PwC. So that's kind of a frame of how the program sort of came about. We had our first class, or first cohort, I guess I should say, that started last August/September. And Aijane is an associate who was part of that group of 6. And now we're at the far end, and I'll just share from a university perspective, and then I'll kind of pass the baton here. This has been an incredible experience. It's been validating to see our recent graduates go into the workforce and immediately be able to earn not only credit, but earn the work experience for the CPA license. We view it as transformational. We view it as something that is allowing really incredible young talent to enter the workforce and immediately get on the pathway to CPA.
From a PwC standpoint, we are really, really excited to be a part of this transformation. This program, one of the main goals is to have new associates on their pathway to CPA. Now, how do we do this, right? All of the candidates that apply for this program apply just like any new joiner would for PwC. They are our associates, so they meet the same requirements and are hired and interviewed the same way as any of our other new joiners will. They all, for this specific program, come from St. Peter's University, so they're St. Peter's University undergrads. And as they're working with us full-time, they're receiving the same benefits that our full-time associates receive. They receive the same coaching, the same trainings. They go through everything that our new joiners would typically go through. Just in addition to that, we ensure that the work that they're doing is mapped to the learning objectives from St. Peter's University. So that's essentially how this program works. They're getting full-time salary, and they're working with us. They are learning, on the job while they're working, the skills. It could be from a project management standpoint, tax skills. They're learning and implementing it on the job on a day-to-day basis. They're in the office working with us hand in hand.
Our learning is done through the jobs that we do. So as an associate, we're put on teams, we're fully incorporated into the firm. And then the jobs that we do at the firm are what kind of trickle into our learning requirements. So it's not a separate process. It's really us fully being into our career and getting that start and then translating it back to our education. And by being an associate and being on these teams and being able to fully incorporate, we get to show who we are, what we can contribute, and what we're learning by contributing to the firm and helping the firm grow and making connections to the teams and the engagements.
So that's some interesting information about different pathways to CPA. What do you think about that, Ed?
I think it's great that people will be given different options as they pursue their career and into the license, and whether they choose to go for a master's or get different credits that are most interest to them, or take this path. I think it's great that people have more options.
And AJ, what do you think? I mean, I know we've heard some, comments about rolling it back to 120, but we've come a long way. The profession has worked really hard to get substantial equivalency and mobility. Rolling back to 120 would put that in jeopardy for us. So I think that perhaps these alternative pathways are a workaround that allows for licensing.
Yeah, I think we really need to keep those two things. It's really critical to the profession to maintain that. So I think what we can do, we should do, to explore, and that's really the purpose of the Pipeline Task Force and the work that we're doing now.
Yeah, great, thank you.
Absolutely.
There are also various efforts underway to help with the pipeline in other ways. AJ, do you want to share what the Center for Audit Quality is doing?
Sure. So the Center for Audit Quality, or the CAQ, has created the Accounting Plus campaign, a multi-year branding and persuasion campaign designed to elevate the image and attractiveness of accounting among Black, Hispanic, and Latino students at the high school and early college levels. As part of the campaign, the CAQ conducted research into the top career priorities for these individuals. I know this slide is difficult to read, but it's available in your downloadable handouts, and I'll just review the highlights and the priorities. Working in an environment that is welcoming to people of all races, ethnicities, and backgrounds ranked as the top priority, followed by feeling confident I can perform the job well and interested in and enjoying the work. So clearly, having a diverse and inclusive environment is something accounting employers should be looking at closely for retention efforts and to have an impact on the pipeline. Another interesting finding from the research is the reasons college business students are not pursuing an accounting major or minor. The top responses were that they don't feel they have the skills and they don't have an interest or passion for the work. So it's up to us to convey the story and share the variety of work that accountants do and the positive impact your work has on businesses and individuals.
Another hurdle to becoming a CPA is the window of time candidates have to pass all four parts of the CPA exam. Ed, there's some good news on that front. Can you share what's going on?
Sure. In April, the National Association of State Boards of Accountancy, or NASBA, voted to increase the length of conditional credit from 18 months to 30 months. This means that CPA candidates now have 30 months from the date that they pass their first section of the exam to pass the other three parts, instead of only 18 months. It is important to know, however, that each state board of accountancy needs to adopt the change in order for it to be effective in their state. On May 18th of this year, the New Jersey State Board of Accountancy agreed to approve the extension. Since a change in the state regulation is required, and that takes time, this approval is on an interim basis. The change applies to students who have already taken one or more parts of the exam, as well as future exam takers. However, the NJCPA has been receiving phone calls and emails from exam takers that NASBA has not updated its website to reflect that New Jersey has approved the extension. Efforts are currently underway to get that rectified.
Thanks, Ed. At a recent State Board of Accountancy meeting, the executive director asked us to let candidates know that specific questions and circumstances regarding the 30-month extension should be emailed to the board at the address on your screen. Be sure to include a screenshot from NASBA's CPA Central portal showing your status and for each part of the exam. This is the 4 boxes. That's what Michaela actually told us, and most of the candidates should know what that is from the CPA Central portal. And speaking of the State Board, December 31 is the deadline for New Jersey CPAs to earn their CPE credits and renew their licenses. If you've had an address change in the past 3 years, be sure to submit the change with the State of New Jersey by September 30th. The link to do so is in the links handout in the resources box on your screen. License renewal notices will be mailed to licensees 60 days prior to December 31st renewal deadline. You cannot renew your license until you receive the notice. That's very important. We've been hearing for a while that CPA firms are struggling to fill positions, but now the accountant shortage is impacting local governments as well. Ed, what are you hearing on that?
An April 2023 Bloomberg article reported that the accountant shortage has left some cities without credit ratings. The S&P recently withdrew ratings on 64 local governments and utility systems because they didn't file their financial reports on time. An auditor for one of the impacted municipalities called the withdrawal catastrophic, and it has left them without the ability to issue a bond deal to finance a new firehouse, among other things. Another municipality lost its A rating from S&P because of a backlog of work due to staffing issues at the city's external auditing firm.
Just a few final updates before we move on to our next section. CPA Evolution, the new version of the CPA exam, launches in January 2024. In preparation, there are a few key dates to be aware of. On November 15th, NASBA will stop processing BEC exam applications. On November 22nd, NASBA will start processing applications for the new discipline exam sections. And December 15th is the last day of testing in 2023 for all sections. Also, we'll be holding CPA week again this fall, November 6th to the 12th. We'll be promoting CPA careers to students, and we need your help. Sign up to make a presentation at your local high school or alma mater via the link on your screen. Next, we're going to hear from Brad Muniz about an important accounting topic. Brad?
Thank you, Teresa. I appreciate you giving me this time to talk about a hot topic. What's that hot topic? CECL. CECL. We have mentioned that word many, many times, Frank and I, have many different sessions. What am I talking about? Current expected credit losses. Why do I think this is a hot topic? Well, the FASB over the past couple of years came out with 3 significant pronouncements. Revenue recognition 606, leases 842, and CECL. Now, CECL was effective a while ago, especially for the public entities, and because of COVID, they delayed leases and CECL at the same time, a little bit of revenue recognition too. But people kind of then sat back and said, oh, we don't have to worry about it as much. And I experienced from last year with the leases, I mean, I had been talking about leases for 5 or 6 years and really tried to push companies to think about the leases 9, 10 months before year end, and we're still dealing with the situation now. People just never really focus on the leases. So why am I saying about leases? Because CECL's effective now. It's effective for calendar years, I'm using that as a date, but calendar years, December 31st, 2023. It's effective the calendar year this year. And if you haven't started focusing on it now, you need to. I'm not saying it's necessarily going to have a big impact on your accounting, but it could have an impact on your documentation process. Your auditors are going to be asking for it. They're going to be asking a lot of questions around this. You need to start focusing on it now. Now, you heard current expected credit losses. It doesn't apply to you. We don't do lending. It's a lot more than that. It also relates if you have accounts receivable. If you have debt security instruments, you have to consider this. So what does it say? It requires companies to estimate the expected credit loss of an instrument over its lifetime using historical information, current condition, and reasonable and supportable forecasts that affect the collectability of the reported amount. So you can't just say anymore, oh, my allowance down for accounts has been $20,000 for the past X amount of years. Or my bad debts for the last 4 years have averaged $60,000. You can't just do that. You can use that as historical information, but that's only one of the 3 attributes that I mentioned. You have to start forecasting the information. Assets are measured on a pooled basis when similar risk characteristics exist. So as an example, I have a client that deals with large box retailers and other smaller ones. So they're going to take the large box retailers, either look at them individually or put them together, and the rest are going to tranche together because of the similar characteristics. And that's how they're going to measure their receivables as it relates to each pool. If an asset doesn't share risk characteristics with other financial assets, it should be evaluated separately, as I was saying before. So actually, each of those large boxes, they're going to evaluate separately because they're so significant as to their concentration and as to the way that they pay. No threshold or impairment loss recognition should reflect a current estimate of all expected credit losses, and credit impairment is recognized as an allowance and not as a direct write-down of amortized cost basis of the financial asset. Okay, so some of that stuff is very obvious or very simple to understand, but this is a very significant guidance that has come out recently or lately, and it's effective now. You need to start focusing on this and determine how you're going to document the process. It can't be, this is what it's been in the past, this is what it's going to be in the future. You've got to start coming up with better averages. That's as much I'm going to give you now. Look for seminars on this. And Teresa, back to you. Thank you for letting me speak on this topic.
Thanks, Brad. Many of you may not know this, but Brad provides a 10-minute ANA update every other Thursday as part of our Issues Watch podcast, as well as being one of our primary law and ethics speakers. And tomorrow we have a law and ethics program that you can still sign up for if you're interested in learning a little bit more from Brad. Please be sure to check out the link on your screen or in your favorite podcast app to watch Brad's ANA updates on Issues Watch podcast. Next, we've got some updates on important NJCPA initiatives and events. AJ, why don't you share some?
Absolutely. So last fall, a new affiliate membership category was approved by the NJCPA membership. Affiliate membership is open to 5 categories of individuals: those who have completed the academic requirements to become a CPA and are pursuing further requirements necessary to become a CPA, those who work in an accounting or finance position under the supervision of a CPA, chartered accountants or the equivalent in any country other than the United States, as well as non-CPA college accounting instructors and non-CPA owners, partners, shareholders, or principals of a firm licensed by the New Jersey State Board of Accountancy. We encourage all of you to think about those in your professional or personal circles who might qualify for membership. Together, we can grow our community. Please participate in our Member Get a Member program by following the link on your screen, and you can even earn a few prizes for doing so.
So we're really excited about this new affiliate category here at the NJCPA. One of the great opportunities that we think it brings is the ability to hold on to students longer, because we find that the average age of CPA exam passers is late 20s, older than you would think. And previously, those people would fall off of the rolls, right? They would no longer be considered a candidate. But the affiliate category allows them to remain a candidate for much longer and, really start to, embrace the, benefits of becoming a CPA. Now, not everyone's going to become a CPA, and the affiliate category allows them to stay a member as long as they're working under the supervision of a CPA. But we do feel like it's important to have everyone in the accounting and finance community at the table, and this is a way to do it.
I think that's a great point.
Oh, Ed, turning it over to you, Ed, sorry.
Thank you. I'm very excited that it is nomination time for the Society's annual Ovation Awards. This is your chance to nominate a colleague or yourself for an award in one of 7 categories. And it's really important that we recognize members that are deserving of this recognition. So please consider nominating, someone that you know that should be recognized. Those 7 categories are emerging leader, diversity, equity, and inclusion, innovation, exceptional educator, women to watch, impact, and lifetime leader. The nominations this year are due by August 21st. Winners will be recognized during our next Issues Watch live broadcast on October 4th, and also in the winter issue of the New Jersey CPA magazine.
I really am passionate about that particular program. Pam Eisenberg and myself have worked a long time to make this program quality, and we used to do one-off awards, and now we're comprehensive. We try to recognize people each year, and we've gotten really positive feedback. So I encourage you as leaders of your firms and companies to nominate people you think that might be deserving of these awards. Additionally, we want to make sure that you're aware of the newest NJCPA member benefits. You can save 20% on a subscription to Accounting Today and stay up to date on the latest issues affecting the profession. Access the discount code via the link on your screen. Another member benefit that we want you to be aware of is Merchant Advocate. They help your company save money on credit card processing fees without having to switch processors. They've even helped the NJCPA save on our fees. Learn more about Merchant Advocate at the link on your screen. Lastly, I want to highlight upcoming Membership Plus courses. Remember, they are free with your NJCPA membership. On August 11th, Renee Rampula will be discussing the new quality management standards. On September 6th, program will show accountants how to embrace and benefit from artificial intelligence. There will be a replay of this webinar on September 11th. And our next Issues Watch Live broadcast will be on October 4th with a replay on October 10th. You can get the full schedule and register at the link on your screen. So that wraps up today's broadcast. You will be receiving a link via email to a short session. Oh, I'm so sorry. I missed questions from our audience. The Center for Audit Quality surveyed a group of approximately 1,400 graduate business students and recent graduates to uncover their attitudes about accounting and barriers they see to entering the profession. The research shows that students aren't majoring in accounting because they don't have a passion for the subject, and also because they perceive the 150 credit hour requirement for a CPA license as a major barrier in cost and time, especially for Black and Hispanic students. AJ, what do you think that the profession can do to address these issues?
Well, I think that, cost and time are definite considerations and why, people would be concerned. So I think that we need to be proactive. We need to look at ways in which we can be innovative within the state. And there are some examples of Work for Credit program. And I think that we are in an environment where we can pilot and test and come up with different pathways to support the journey to CPA licensure. So,
I mean, we've heard for years that getting the awareness of the profession out there is critical, right? So we talked a little bit about signing up for CPA career awareness presentations during CPA week, November 6th to the 12th, if you haven't already done it, because this is a great way to get people out and help students learn about what we do in accounting. And you've gone and done some of these presentations, haven't you? Have you gone to?
I've been involved. Yeah, absolutely. Yeah, I think it's very important that the younger people that we can explain what we actually do. I think that's very beneficial.
Yeah, and I mean, again, I've been involved in that program for a long time, and I've heard numerous times about people who decided to go into accounting because of the presentation they heard at their local high school, and then have gone on to reach out to the person that spoke to them and said, I became a CPA because of you. So, I mean, it's a feel good, low risk, get out there and talk to your community about why it's so great to be an accountant.
And I also think that it, speaks to sharing the story, right?
Yeah.
And helping those individuals at the high school and college level to understand the variety of work that CPAs really do, and not just what they've heard, but I think it's really important that they see individuals who are doing interesting things and supporting business. So I think all of our members could participate that way.
Yeah. I mean, Ed, your dad was an accountant, was a CPA, right?
Yes.
And that spurred you into
Certainly.
Choosing that profession. And I mean, I'm not speaking out of turn, but you have a couple of future CPAs in the works as well.
My son is now also going through the process. Yeah, he's actually interning now in our firm, and he'll be a senior this year. Yeah.
Oh, that's terrific. So, you just need to have a few more and then, solve the pipeline.
There you go.
So that wraps up today's broadcast. You will be receiving a link via email to a short session evaluation. Please take a few minutes to fill it out. In addition, you should receive your CPE certificate within 1 to 2 weeks. If you have a colleague who missed the program, we will be replaying it on August 1st at noon. And our next Issues Watch Live broadcast will be on October 4th. I want to thank AJ and Ed for joining me today. It's been a pleasure to have you.
Thank you.
Good
Thank
to
you
be
for
back in the
having us.
studio.
Good to
Yeah.
be
It's
here.
great to be
Thank
here.
you.
Thank you very much. And thanks again to our guest presenters, Maria Scarata and Brad Muniz. Have a great afternoon, everyone. Thank you.